Welcome to Hart Energy and Stratas Advisors What's Affecting Oil Prices for the week of July 31st, 2017.
In the week since our last edition, Brent crude increased almost $4.50 week close to week close, beating our expectations due to a larger than expected crude draw from the EIA. This week, we expect crude stocks to fall approximately 3 to 4 million barrels, as runs appear to have steadied near their seasonal peak. For the week ahead, we expect prices to remain flat or fall on fears that the market is overbought, with high sensitivity to bearish headlines. Brent will likely average $50 a barrel during this week. We also expect the Brent WTI differential to increase, trading to around $2.50 with respect to the September contract. After contentious elections in Venezuela this weekend, it remains to be seen if the U.S. government will increase sanctions against the country. Until forward progress is made on this issue, we consider geopolitics a neutral factor. Speculators have been increasing short positions against the U.S. dollar for several weeks, reflecting expected weakness moving forward. But the correlation with crude prices remains weak, representing a neutral factor. Trader sentiment will be negative this week as Brent quickly approaches overbought territory. Given these fears, traders will presumably be especially sensitive to any negative fundamental data. Thus, trader sentiment will be a negative factor for this week. Last week, the number of operating oil rigs in the U.S. increased by 3, according to the weekly report from Baker Hughes. Additionally, several OPEC members' production remains above agreed-to limits, denting the effectiveness of the deal. A joint OPEC-non-OPEC meeting is being held August 7th and 8th for deal participants to discuss why production is still elevated. Despite some disruptions in Nigeria and the potential for sanctions in Venezuela, we consider supply a negative factor for this week. Healthy demand remains a supportive factor for crude prices. EIA product supply numbers showed total product demand increasing last week, with an especially strong gain in gasoline and healthy gains in distillate and jet fuel. Therefore, we expect demand to be a positive factor for this week. Refining margins in the U.S. were up last week, but fell in Europe and were mixed in Asia. But overall, margins remain strong, supportive of higher runs and greater crude demand in the short term.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us.
To stay up to date on the most recent Hart Energy videos, subscribe to our YouTube channel by clicking here.